more and more and more of these nations will be trading outside of the SWIFT, outside of the dollar, using local currencies, and presumably settling imbalances in gold. That is the whole architecture that is being set up both through the BIS well, they're kind of out of it now, mBridge, with all of these countries, Saudi Arabia, China, Hong Kong, Thailand, UAE, and the cross-interbank payment system, the CIPS, as well as the B2B, the BRICS Pay, and all of these new systems that are being set up not only to sidestep dollars, but the whole premise of holding excess dollars is to not let them sit in an account, but to recycle them into treasuries, which has kept our interest rates low and our asset prices high. And
gold and silver are currently witnessing a massive structural shift as global central banks distance themselves from the US dollar. While the headlines often focus on price fluctuations, the real story is the unprecedented rate at which nations are draining physical inventories to fortify their own reserves. With inflation remains a persistent threat and geopolitical tensions rising, the window to secure these metals at current valuations is narrowing. This isn't just a market trend, it's a global race for financial sovereignty that places physical gold and silver at the center of the new economic order. In this video, we sit down with Andy Schectman, president of Miles Franklin, who breaks down the dismantling of the traditional dollar-based system. Andy explains how a new financial architecture utilizing systems like mBridge and BRICS Pay is allowing nations to trade in local currencies and settle their final imbalances in gold rather than dollars. He warns that as countries stop recycling their excess capital into US Treasuries, the era of low interest rates and high asset prices may be coming to an abrupt end. Now we present the clips from his interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Well, yeah, I had someone ask me on my live stream last night, if gold and silver are becoming so hard to get, why can I get silver eagles anywhere I want? And that's the little man rule right there, that the retail public, it has really been misdirected to anywhere but here. And so what you have are the most sophisticated traders in the world and, accumulating metal. I like to look at what happened in February. One thing I didn't talk about on your show is what happened with gold in February. Now, you and I talked a lot about what happened with silver in February, but when you look at what happened in general in February, you get the BIS coming out and saying it's structural, it's not fundamental, it's because the CME group raised margins by 300% along with the rebalancing of the levered ETFs. That's why largely the metal price collapsed. Well, okay, we talked about how Chinese gold imports rose to 162 tons in March. That was the highest since 2024, the third consecutive monthly increase, the 18th consecutive monthly purchased. They purchased 365 tons of gold alone in Q1 2026 as the price was getting kneecapped. And 365 metric tons works out to 11,735,000 ounces at today's prices. That's 54 billion ounces of gold that China bought in the first 90 days of 2026 as the price was getting destroyed, as the little man was running, the big people were doing it here. And how about back at the ranch here? Every single COMEX contract, gold contract, for a primary gold month in 2025 set all-time delivery records. 18 straight months of COMEX deliveries. And how about February? Now, February is the big one. Now, February is a major delivery month for gold. It is not a major delivery month for silver. They alternate. We talked about silver. 26 million ounces delivered, 39 million ounces leave COMEX. When it's delivered to the vault. Some leaves, some stays in what's called typically in an eligible category, not for sale, just gets moved into safe storage. So 26 million in an off delivery month, not a huge amount compared to what we've seen during the primary delivery months, but still, $1.5 billion, $2 billion. 39 million ounces, which is 2.8 million ounces, pounds rather, 2.8 million pounds, 2,800,000 pounds leaves COMEX, 160% of what deliveries can explain. But how about gold? a major delivery month. 76,567 contracts delivered. That's 7,656,700 ounces of gold, a new all-time record. That's 35.2 billion in physical gold delivered in a single month as the price of gold's teeth was getting kicked in. Do we see the little man rule there? I mean, that's to put that in perspective, Dunnigan, that's more than the entire GDP of Iceland, Jamaica, and Panama combined. To put that in a historical context, the entire 5 years of 2015 to 2019 averaged only 130 tons per year in deliveries. February alone was 238 tons, nearly double the entire year's average from 6 years ago. So, who took 39 million ounces of silver out in February, 2.7 million pounds as the price got smashed, who stood for delivery for 238 tons of gold, highest ever, as the price was getting smashed. And that's on top of 9 years worth of central bank purchasing and all of the BRICS countries accumulating, and Poland. And I mean, it's just nonstop. So that's the little man rule. The little man is, where is the little man? Little man is not invested in metals. It's still a very minute segment of the public, as the biggest money in the world not only is delivering metal, but a lot of it is being moved out of the vaults, just like France did by bringing their gold home. So, yeah, I think that is what the little man rule is, that they're usually last to figure it out. The big money uses price, like this, as a tool of misdirection, uses rhetoric and the cover of all of this to accumulate incredibly large positions that are way outsized from what we're used to seeing.
While retail investors are often distracted by short-term price drops, the world's most sophisticated traders are quietly accumulating massive amounts of physical metal. In the first quarter of 2026 alone, China imported a staggering 365 tons of gold, over 11 million ounces, taking advantage of suppressed prices to secure their 18th consecutive month of purchases. This aggressive accumulation by major global players is happening exactly when public interest seems to be waning, highlighting a massive disconnect between institutional strategy and retail sentiment. The data from February 2026 tells an even more shocking story of record-breaking physical demand. Gold deliveries on the COMEX reached an all-time high of 238 tons in a single month, nearly doubling the annual average seen just a few years ago. Simultaneously, nearly 3 million pounds of silver were pulled from vaults as big money used price volatility as a tool for misdirection. The little man is often the last to realize that as the price gets kneecapped, the largest entities in the world are clearing out the shelves. Let's get back to the interview.
Well, the big news, obviously, is that the UAE dropped out of the OPEC conglomerate, the OPEC cartel. And I think that's a pretty big deal that people need to focus a little bit more on, because UAE is a charter member of the mBridge platform. They're one of the original architects of the mBridge platform. They have already been trading for oil outside of the dollar system. They are members of the BRICS. This, like Saudi Arabia, allows them to have 1 foot in and 1 foot out of the Western system. It allows them to pump oil in unlimited quantities rather than be beholden to the guidelines that are imposed by the larger cartel of OPEC. It's a big deal. It's just another chip against the hegemony of the West and of the petrodollar. And, when you talk about the petrodollar, the one part that's often overlooked, yes, all of these countries, part of the deal was to accept only dollars for oil. Now, we know that that's changed. A year or so ago, Saudi Arabia and OPEC more or less said, look, we'll still take dollars, we'll take other currencies as well. We've seen that expand tremendously, obviously, with the yuan and where gold fits into all of this. What's often overlooked is that the recycling of dollar reserves into US Treasuries. And if you don't hold as many dollars because you don't need as many dollars to trade for oil, why then you don't need to hold as many US Treasuries to recycle. This is a big deal. In fact, it's a very big deal, much bigger than I think people give credit to. You look at the expansion of the cross-interbank payment system of the SIPs with China recently into the Asian nations. That's 800 million people, twice the population of the U.S., twice the population of the U.S., where it's China's largest trading partner by far. More and more and more of these nations will be trading outside of the SWIFT, outside of the dollar, using local currencies, and presumably settling imbalances in gold. That is the whole architecture that is being set up both through the BIS well, they're kind of out of it now, mBridge, with all of these countries, Saudi Arabia, China, Hong Kong, Thailand, UAE, and the cross-interbank payment system, the SIPs, as well as the B2B, the BRICS Pay, and all of these new systems that are being set up not only to sidestep dollars, but the whole premise of holding excess dollars is to not let them sit in an account, but to recycle them into treasuries, which has kept our interest rates low and our asset prices high, and goods we buy at Target and Walmart cheap. These are being chipped away at. It's a big deal, a very big deal. Yeah, and this is a very big deal as well, because you're seeing Tether accumulate more gold really than anyone in the world, with the exception of the central banks. They purchased 6 tons of gold in the first quarter of this year. They don't quite understand what a metric ton is. It's roughly 32,150 ounces, give or take, times so 1 metric ton is $147,890,000. Multiply that times 6. That's what they bought first quarter. They're now up to 132 metric tons. So that's worth almost $20 billion. This follows a 26 and a 21 ton purchase in Q3 and Q4 of 2025. Their holdings have more than doubled in the last 12 months. They've tripled in value over the same period. The interesting thing that I just want to, they're not related, but in 2025, the crypto firm Tether, is the way the article specified it, acquired more gold than every other central bank except Poland. Now, I've read this on your show before, but just for people to hear it once again, from Adam Glipinski, the head of the Bank of Poland, in September of 2025. I think the most powerful quote, one of them I've ever heard. He says, in these difficult times of global turmoil and the search for a new financial order, he says, gold is the only safe investment for state reserves, and gold will retain its value even when someone cuts off the power to the global financial system, destroying traditional assets based on electronic accounting records, of course. We did not assume this will happen, but as the saying goes, forewarned is forearmed, and the Central Bank of Poland is required to be prepared for even the most unfavorable conditions. I say that because they bought more gold last year than anyone but Poland. And when you hear a central banker say that kind of stuff, say, someone's going to shut off the power to the global financial system, and we're looking for a new world order, what is that? Is that Freudian slip? Is it clearing his conscience? Is it throwing out a few crumbs of clues to people paying attention? I don't know, but it's a big deal, because I think what Tether is doing is on behalf of, if I had to guess, it's a guess, I think they are acting in many ways in concert with the U.S. government to, I think we have transitioned, done again, to a period of time where the U.S. government wants to see metals higher, that they're looking for gold to go higher, organically, of course, at first, synthetically / organically, without it being revalued per se. But having a company like Tether do this, if I had to guess, when Bo Hines is inserted into the CEO role of USA Tether, who is Trump's crypto czar through August, there is a deal in place, if I had to guess, wink, wink, nod, nod, whereby that gold that you continue to accumulate with the interest on the stable coins that is not transferable, you're going to sell that gold to the US Treasury at some point. And I really do believe the higher and higher and higher and higher gold goes means the lower and lower and lower the dollar goes. That is the debasement trade. That is a form of devaluing the dollar. That's what they want. So seeing Tether continue to pile money into gold, and it's funny, you look at the central banks doing the same things. The companies that create and print money are the ones buying so much of what they can't create and print. It says a lot. So too does Tether doing what they're doing, in my opinion.
While retail investors are often focused on the next market dip, the world's most sophisticated traders and central banks are making massive structural moves behind the scenes. China alone imported a staggering 365 tons of gold, nearly 12 million ounces, during a period where prices were being suppressed by a 300% hike in CME margins. This is not just a simple accumulation. It is part of a calculated dismantling of the Western financial hegemony as nations move to settle global trade imbalances in physical gold rather than US dollars. Share your thoughts in the comments section below. If you found this market analysis valuable, please support the channel by liking this video and subscribing for more exclusive precious metals content. Don't forget to hit the notification bell to stay updated. Thanks for watching.